A lot of state insurance departments are what are known as captive regulators. They are dependent on the auto insurers and homeowners insurers to the point that instead of being impartial or being on guard to help consumers, they become really the agents and allies of the insurance industry. There are a number of reasons why that happens, but it's just a fact. And you can tell this because they'll keep things secret that the state insurance regulators know to your disadvantage. So there's new data out that's been published about insurers in the state of California, the largest auto insurance market in the country, that is valuable for you to know about what's going on. So I told you last year that Allstate was in a world of hurt, had been losing a lot of money on their auto insurance book of business, and that the Allstate executives had told Wall Street they were going to raise rates as high as they possibly could. And that's now come true here in 24. How much is Allstate raising insurance rates? And this is a proxy for the country, and it'll vary by state. But they're raising rates in California, again, the largest insurance market, by up to 55% at renewal. You could have no change in your driving profile, no accidents, no tickets, no at-faults, and still get a renewal notice 55% higher. The average increase, 30%. Then let's compare that to Geico, another large insurer. Their average increase, 12%. State Farm, in many states, the largest insurer, up 21% average. So what you need to know is that the loss ratios at different insurers are different. In fact, some insurers are making money right now on auto insurance, while others are losing money. And Allstate was losing buckets of money, which is why they are pushing their rates up through the sky. So when that renewal notice comes that says you're going to owe a zillion more for your auto insurance, do you just pay it? No, you don't. You shop the market. Shop the market. Because each insurer classifies individual drivers or a household differently. So you may have one insurer who's like, oh, well, we don't like blah, 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 so we're pushing the rates up this much. Another insurer might not mind blah, blah, blah at all and offer you a much lower rate. The only way you know is to shop, and you need to shop the identical coverages. And this auto insurance thing is a problem around the country because when vehicle costs went way, way, way up and the value of used vehicles went way up, what it did was it meant that when you were in an accident, if they totaled out your car, the amount they were having to pay was much higher than their analysis said it would be, multiplied by the number of people who had vehicles totaled, and repair costs were higher. And so that is one of the factors that led insurers to be upside down in auto insurance. At Clark.com, we have a guide how to shop for lower cost car insurance. Go check it out when you get that ugly renewal notice, and go shop the market and get a better deal. I want to thank you so much. And if you enjoy what you've seen here, you can watch our full show at youtube.com/Clark. You also can subscribe to our wonderful newsletter at clark.com/newsletters.